ARK Invest's Big Ideas report for 2022 was released a week ago, and it is both thrilling and confusing. It is thrilling because of both the topic and the time. For growth stocks, great ideas came out right at the top last year, and many of those same growth stocks have now fallen by more than 50% in the last 3 months, bringing them back to attractive valuations. I do understand that seeing nothing but red in your portfolio can be tiresome, but with prices so low, now is the ideal opportunity to perform in-depth research to technology developments that ARK Invest believes could lead to exponential growth over the next decade. One of the most intriguing implications of this analysis is that typical Wall Street analysts may begin to miss the mark more and more over the next decade, as they fail to account for how various technology trends overlap and feed into one another. So for today's episode, we'll show you how to grasp and get the most out of the entire presentation, at the very least on a high level. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now, let's get to the video as soon as possible.
I believe we have the best research on innovation in the industry. The research is the courage of our conviction. Now, I know and I completely understand what investors are going through today, given all the fear, uncertainty, the doubt, the volatility. Volatility is not always a bad thing. A year, 18 months ago, volatility on the upside was a beautiful thing. But volatility on the downside is painful. It is important to keep a long-term investment time horizon when you're investing in innovation. I have never seen innovation on sale the way it is today. This disconnect will not last. We are in prime time. This is no longer a dream. And we think it's critically important that investors get on the right side of change. Because during the next 10 years, we believe disruptive innovation in the public equity markets will scale at a 30% annualized rate from roughly 10 to 15 trillion now to more than 200 trillion in 2030. And the rest of the market, we believe, is going to be hit by something called creative destruction. The destruction caused by disruptive innovation as it disintermediates and disrupts the existing world order. And so now I'd like to introduce Brett Winton, our Director of Research.
It really is a unique time in technological economic history. So I'm happy to share with you our Big Ideas 2022. One of the things that we've noticed in particular over the last 6 and 12 months is the degree to which the innovations we're focused on are converging. The way in which AI is feeding into genome sequencing, blockchains in the consumer space. Kind of the convergence of technology is where a lot of exciting opportunities lie, both because there's likely to be more misunderstanding there, and you can get these compounding effects where you have an S-curve building on top of an S-curve, and the overall opportunity set for a set of businesses can amplify. There are 5 innovation platforms that we focus on: AI, energy storage or battery technology, blockchain, in particular public blockchains, robotics, and then DNA sequencing, or I think of it as gene read-write. This is the composite forecast of the 14 technologies that we focus on and the aggregate market cap appreciation that we anticipate accruing across each of these 5 technologies. As you can see, the rate of growth is very high. Not only that, this suggests that the market cap attributable to innovation will exceed meaningfully the market cap attributed to other businesses over the next decade. Then from a allocation perspective, you're better off being in front of that wave than waiting for it to occur. Collectively, these 5 technology platforms we expect to accrue over $200 trillion in value over 10 years. This highlights the 14 underlying technologies that fit under these platforms. Each technology is discretely modelable, but there is also important dependencies between the technologies. One of the reasons to be optimistic about robotaxi and the economic value that robotaxis can deliver is because of the fundamental innovation happening in the AI and neural net space. This is how kind of a visualization of how the asset value accrual will break down. Again, you can see that each of these technologies against which we have defined a cost decline curve and done unit economics cases for end buyers are experiencing steep cost declines. They also cut across sectors, which is an important characteristic. So I'll spend a moment on each technology platform. Within the AI space, we expect that artificial intelligence and the associated technologies will yield more than $100 trillion in market capitalization by 2030. There's mobile connected devices here. That includes expectations for augmented reality headsets and the constellation of devices that you wear on your person. Cloud computing is kind of the infrastructure as a service layer that gives us access to a supercomputer in our pockets from any connected device. As a response to the demand for AI, we think there's going to be a meaningful increase in compute hardware spend to support it, exceeding $1 trillion. Internet of Things is fixed connected devices. So the smart speakers, the smart TVs, and you can think of this is the media retail space that lives inside your home that allows you to frictionlessly buy things through e-commerce platforms and frictionlessly access media and potentially, public blockchain Web3 assets. And of course, AI itself, and this drives a lot of the value accrual expectations here. The value accrual is predicated on the fact that the advances in AI suggest that it's not going to be considered artificial intelligence, but instead augmented intelligence, where every knowledge worker will become more productive. Every software engineer will become more productive. And the productivity value that we anticipate spilling off AI will actually meaningfully exceed the revenue that AI software companies will capture. Within the battery technology space, this is where we capture both energy storage opportunities as well as autonomous mobility. Autonomous mobility, and robotaxi in particular, we believe is going to be the most economically productivity generating innovation of all time. The logic is relatively simple. We spend 700 to 800 billion hours driving a year as amateur drivers. And so if you can displace that, people will happily pay to be driven around, and you end up with this economic value creation of the freed up time. On the battery technology side, it's interesting. It seems as if the automotive space is being priced as if the pricing structure of selling cars will not transform. And as if every single competitor is going to trend towards Tesla-like margins on their ability to produce electric vehicles. We think that's probably misguided. It's hard to imagine autonomous mobility services coming into play without dramatically changing the unit cost of a vehicle and the form factors that will be sold into the market. And so tread carefully there. Within the robotic space, this includes 3D printing, where you can essentially manufacture any part on demand. You can de-risk supply chains, you can get complexity for free, and you can deliver better performance, particularly within aerospace. It includes robotics, and we have a back-end weighted expectation for robotics value accrual. It's heavily contingent upon continued advances in neural nets. Robotics within the manufacturing space can become much more flexible and software defined, and that would meaningfully increase the productivity of the world of built things. And then reusable rockets. And with reusable rockets, you have crossing 2 orders of magnitude in cost declines of getting things up into orbit. It seems like the most meaningful opportunity here is in low Earth orbit satellite constellations delivering connectivity, but it's still in a very early stage as to what's going to be realized with that technology, including potentially hypersonic travel around the world and transformations in logistics on that basis. In the genomic space, there is amazing convergence between these technologies. The inexpensive gene editing that's been delivered by CRISPR technology yields insights and easy experimentation, which then makes the sequencing, generating the molecular information more valuable, which then allows us to discover more diseases and disorders and the fundamental molecular basis of them, which enables us to develop and deliver living therapies into the body to cure them. So this is the technology platform that's in its earliest stages, and it has perhaps the greatest potential for providing benefit to humanity as we are able to hopefully eliminate pernicious diseases. Finally, within the public blockchain space, we think that this should best be understood as three concurrent revolutions that have all been catalyzed by the introduction of Bitcoin into the world. There's a money revolution, which Bitcoin is positioned to win. There's a financial revolution, which comprises the DeFi space and everything that's happening with smart contracting within the financial ecosystem. And then there's the consumer internet revolution, which includes all of the experimentation going on with NFTs, including people buying digital JPEGs for hundreds of thousands of dollars. The other technology that we categorize here that's often overlooked is digital wallets. And you can think of public blockchains as tearing apart and remaking the back end of the financial ecosystem. How are assets custodied, kept track of, transferred? We believe that digital wallets are refiguring the front end of financial ecosystems. The two largest consumer-facing financial companies in the US, as we think about it, are not traditional banks, but Venmo and the Block's Cash App. It's actually hard to imagine that 10 years from now, you will be going into bank branches to conduct financial transactions. We think that model doesn't make sense. Instead, it's likely that these front-end digital wallets that can cross-sell you into all kinds of financial services and have very low customer acquisition costs, and become increasingly important if you're in a multi-asset world where you're transferring in and out of cryptocurrencies, almost $10 trillion in market capitalization globally that they'll occupy. So that's an overview of the technologies that we cover. One of the key characteristics that we believe differentiates us as a team, I think that we are well positioned both to understand where technology is going and to appropriately model the S-curves that can compound on top of S-curves as a result of these convergences.
Traditional Wall Street analysts who don't consider how all of these pieces go together, as I mentioned at the start, will have a harder and harder problem appropriately pricing this interconnected puzzle. Traditional experts, for example, may continue to criticize that Tesla's market capitalization exceeds that of practically every other car maker combined. However, valuing Tesla based on its future scale and profitability of its outputs in robotics, battery technology, and artificial intelligence applications will likely yield a considerably more accurate picture of the company's true worth. This could explain why you see Wall Street analysts adjusting their price estimates more and more to chase current levels. That is also why ARK Invest's Tesla price forecast for 2025 differs so dramatically from a standard Wall Street price target. Because of a few elements put together, ARK Invest has such ridiculous-sounding trillion-dollar forecasts on many of these presentations. To begin, there are enterprise values, which are defined as the sum of assets and liabilities. Second, rather than being limited to one or two firms, these are large families of technologies that cut across many industries and geographies. Finally, because these technologies are convergent, they can all help each other unlock costs and capabilities. The concept of convergence refers to the idea that advanced technologies are increasingly overlapping. For example, as artificial intelligence improves and becomes more affordable, teaching a car to drive itself becomes easier and more affordable. Programming robots, optimizing battery designs, sequencing the human genome, and other tasks become less expensive. However, if sequencing the human genome is less expensive, laboratories will be able to conduct more tests, uncover more proteins and medicines, and develop more personalized therapeutics. You'll underestimate all of these technologies that artificial intelligence enables, as well as all of the ones that those enable, if you don't model the change in artificial intelligence capabilities and costs over time. Cloud computing, robotics, and everything else in this web may be described the same way. Everything is interconnected. The size of each dot is how much ARK Invest believes each technology market cap will be in 2030, and the size of each connection represents how much any two technologies will influence one another. So, there is a strong link between artificial intelligence and cloud computing, AI and mobile connected devices, and AI and autonomous mobility, for a variety of reasons that I'll go over when I go over these technologies in depth. Similarly, there are some unexpected connections in this article. Our blockchain and reusable rockets related. There could be some big upside here if we can figure this out and identify the company executing this concept before Wall Street does. This plot, at the very least, gives investors a direction to look. Another blunder. Artificial intelligence is one of the 5 innovation platforms on which ARK invests all of its research. It is also one of the 14 disruptive technologies on this graph that are converging. It is also the first significant concept. You're not alone if that makes your eyes cross. But please allow me to explain the distinctions between an innovation platform and a disruptive technology and a big idea. Consider all the Googles, Microsoft, Apples, and Teslas that work in this space. Banks that use AI to price risks, pharmaceutical companies that use AI to identify drugs, robotic industries that use AI to optimize production, media companies that use AI to suggest music and movies, and so on. Artificial intelligence could pervade almost every aspect of our lives in 2030. The other 4 technology platforms function in the same way. Many technologies in a variety of industries are built on top of these platforms. Mobile linked gadgets, the Internet of Things, cloud computing, and AI are all included in the artificial intelligence innovation platform. The AI technology has a more precise meaning. It is a growing market. But what is the size of the market's expansion? I'm currently trying to find out the exact amount for the AI technology bubble, which is growing at 26% compound annual growth rate. It turns out that each of the 5 innovation platforms has its own technology bubble, 2 of which are also big ideas. The 14 big ideas do not correspond to these 14 technologies in a one-to-one relationship. You can see that they're designed to be new markets that are enabled by these technologies overlapping more and more if you go all the way back to ARK Invest 2019 big ideas. As a result, all of these big ideas are market segments that are predicted to grow at an exponential rate over the next decade. You may attain exponential growth by having a fast-growing firm in a fast-growing industry. Thus, we should be looking for businesses that are being established now to take advantage of these opportunities. Hopefully, this episode clarifies the structure of ARK Invest's 2022 Big Ideas report, as well as some of the distinction between the 5 innovation platforms, 14 technologies, and 14 big ideas presented here. And with that, the video for today comes to a close. To express your love and support for the video, click the like button below if you haven't already. Also, subscribe to the channel by clicking the subscribe button. And to be the first to know when a new video is posted, turn on the notification bell next to it. Thank you for taking the time to watch, and we hope you enjoyed yourself. We look forward to seeing you soon.